So, the first half of the year is done and the stock market is still moving higher, with our global ETF standing at plus 14.62% in only 6 months. Since that's double the long-term average of 7% per year, that's surely it for the rest of the year, right? Well, not necessarily. There are a few headwinds that are likely to drive the market further upwards over the coming months, which we'll get to today. As usual, we'll also take a closer look at how my ETFs performed in actual numbers in June and how my exit from peer-to-peer lending is going. In case you're hearing about this for the first time, make sure to check out my recent video for more context. Since I'm not planning on having over 42,000 euros piling up on my bank account uninvested, I'll also tell you where I'm moving this freed up cash instead. Let's begin by looking at stocks in the form of ETFs, the largest portion of the investment portfolio I share with my wife. Our main ETF, the Vanguard FTSE World, continued moving higher, plus 3.51% in June, and is now up 14.62% since the start of 2024. As for our ETF portfolio in actual numbers, with an average return of 10.89% per year since 2017, we're now sitting at over 332,000 euros in globally diversified low-cost ETFs, with a year-to-date return of plus 41,000 euros. Since it feels like the market has gone up pretty much non-stop since 2023, many are expecting this rally to end sometime soon. And while that would not surprise me, as a correction of around 10% is long overdue, as those tend to happen on a regular basis, investor sentiment is not as bullish as you may think when looking at the Fear and Greed Index, where we're currently hovering between fear and neutral. This in turn could mean the rally may be far from over. Not only that, election years in the US, like the one we're currently in, tend to be very positive for the stock market, especially during the last few months of the year. Additionally, the first expected interest rate drop by the Fed and the subsequent increase in liquidity later this year could further boost the market. And yes, in this case I'm talking about the US market. But with a current share of 72% in an MSCI World and 62% in the FTSE World, this significantly impacts our returns as global investors. Either way, whatever happens, our long-term investment strategy, which has served us very well so far since 2017, will remain the same. We simply buy more global ETF shares on a monthly basis, no matter what is going on in the markets or what the news are telling us we should be worried about next. By the way, you can find the best low-cost brokers for ETFs in Europe linked down below in the description, which is a great way to support me if you'd like to. And don't forget to subscribe while you're there. This brings me to Trade Republic, one of the brokers I use the most, not just to buy ETFs, but also as a high-yield savings account. That's because they're directly passing on the ECB interest rate of 3.75% per year on uninvested cash, secured by a 100,000 euro bank deposit guarantee. In June, we earned 70.69 euros in interest on our savings here, plus 14 euros from the 1% Saveback using the Trade Republic card for our expenses, which was invested into our ETF of choice. The broker started rolling out fully featured bank accounts in Germany last month, which they're able to since they have a German banking license. These could be quite interesting once they become available in other countries across Europe like Austria, where I live. However, since it will likely still take a few months for that to happen, I don't think it makes much sense to waste your time going into too much detail just yet. After all, some of the features could change until then, and I prefer sharing my first-hand experience with you once I have access to the new bank account myself. Alright, let's see how my exit from peer-to-peer lending has been going. Since I've shared my experience as an investor in this sector so far, I feel like it's only fair to share the other side of it as well, namely when you want to withdraw money from each platform. By the way, I made this decision at the end of June. If you want to find out more about the details why, make sure you check out this recent video of mine. Alright, let's quickly go over my process and what I've been able to do so far. On Mintos, I started last month with an account value of over 11,000 euros. After I made the decision to exit peer-to-peer lending less than 2 weeks ago, I was already able to sell and withdraw over 60% of what I invested in loans, dropping my account balance below 4,000 euros. I did not sell any loans at a discount. The fees you see here are simply because Mintos charges a 0.85% fee to the seller when using the secondary market. This fee does not apply if you're using the cash out function via their automated strategy, which I wasn't using. Meanwhile, I actually sold my loans with rates above 13% per year at a premium of 0.85%, which you can see here, simply to cancel out the secondary market fee for these loans with higher demand. My overdue payments of around 2,500 euros will likely take some time to be fully resolved, so I'll keep checking on my Mintos account over the coming months and years to withdraw what comes back from these as well. Now, Escadit was the easiest to cash out. I simply disabled my auto-invest strategies and set the amount to 0, and as you can see in my account statement, within only 7 minutes, all of my loans were sold to other investors and the cash was back on my account. In this case with 0 fees, which is great. RoboCash was the second easiest to exit, as I could easily sell 98% of my loans on the secondary market, once again with 0 fees or discounts. Here's how it works. Just click on my investments, filter by current, select each loan and click on sell. Now you just need to wait for another investor to buy it, usually via their auto invest. It only took a few minutes here as well, and almost everything was back in cash on my account. Make sure you stop and set your auto invest strategies to 0, by the way, if you want to withdraw your money. As for Lande, they luckily also have a secondary market. So I simply selected every loan I was able to sell and placed it on the secondary market on June 28th, and within that same day I was able to have 1,194 euros back in cash on my account, also without any fees or having to discount my loans. And since VA Invest does not have a secondary market, I was only able to withdraw about 600 euros worth of available funds from repaid loans after stopping the auto invest so far, and based on my outstanding investments, it will likely take up to 197 days for me to be able to withdraw everything. Income Marketplace also doesn't have a secondary market, so I simply stopped my auto invest and I'm withdrawing the money that is paid back over time, 1,187 euros so far. Last but not least, I was able to withdraw 1,030 euros from Debitum so far, and I'll withdraw the rest as my loans had paid back over time, since there's no way to sell loans early here either. All in all, I've been able to withdraw 23,458 euros within less than 2 weeks of stopping my peer-to-peer investments, more than half of the sum I had invested in this sector. Now you may be asking yourself where I'm putting this money. My strategy is pretty simple. I'm investing 80% into globally diversified low-cost ETFs, 10% into speculative assets like Bitcoin, and the remaining 10% will stay in cash on my Trade Republic account, earning 3.75% interest per year. Alright, now let's finish things off by looking at the portion of my portfolio that carries the highest risk by far. My small speculative allocation to the two largest crypto assets, Bitcoin and Ethereum. Both of them performed poorly in June, dropping between 5 and 7%. Sadly, the first week of July is looking even worse so far, pushing the 2024 returns for both assets down to 35.6% and 33% respectively. If you're new to this highly speculative asset class, drops like this may shock you, but they're actually quite frequent when looking at the past, also during bull markets. And it's once again a good reminder that crypto carries a lot of risk and should only make up a small percentage of your portfolio if you decide to include it at all, as it's definitely not for everyone. Based on previous market cycles, I do expect these to perform well over the rest of the year, but we'll have to wait and see. Alright guys, that's it for my latest investment update. I hope all of you are having a great summer so far. Before you go off, don't forget to gently tap the like button if you enjoyed the video and to subscribe if you haven't yet. If you'd like to support me, you can find links to my favorite financial tools in the description below. And of course, none of what I talked about today was meant as investment advice. I'm just sharing my personal opinion based on my own experience as an investor. Thank you guys so much for watching, have a wonderful day, and until next time.